Everybody. Super excited to talk about the level 25 swings today. For anyone on the outside of the Discord, these are swings that are based off of repetitive options flow and a signal that is actually set up by Tradytics algorithm and alerts through our Discord. The alerts actually come in through TradeFlow AI. And one of the things that I've done is create a specific channel where if I see something come through, it started with 25 orders or more. But if I see something come through that's 15 orders, 16, 17, 18, 19, and upwards with a solid premium and a relatively near expiration date, I will alert it in the level 25 swing. So for instance, this trade right here would not get alerted by the Tradytics algorithm, but I alert it just because I think that it still holds value, especially in such a downtrending chart. So I always show the charts. There will be a new format that's coming out this week. I'm going to alert it. I'm going to show the chart. I'm going to show the elbow flow and a possible stop loss for these because these don't always pan out. They have an 83% win rate over a few hundred of these alerts. They don't always pan out. Some of them have long expiries, so they're going to be massive swing trades or leaps, and all of that date is rapidly approaching. So here's what I do, and here's how I would trade them. So the question is, what are they? As I said, they're repetitive orders in the options flow for a single ticker on the same expiration, same strike. Not just repetitive orders for one stock. It's always the same strike and always the same expiration. So the same contract is being bought up repetitively or sold sold repetitively. So here's how I would trade these, and here's how I suggest that you trade them. There's two different ways you can do this. Number one being a lotto, meaning you don't really chart it. You just say, okay, there's the flow. I'm going to follow flow, and I'm okay losing everything that I put into it. Or a certain percentage of that, and you play it like a lotto. Number two is you chart it out, you find an entry or a pullback, and you try to get your own executed order that's kind of piggybacking off of the options flow. Now, what I want to show you is how I will alert these, and how you can also do some of your own due diligence to look at these. So like I said, here's how I would trade these and how I would go about doing this. You can wait and just sit in trade flow and look at these. If you don't have a Tradytics account, you're not going to get alerted of them through the Tradytics website, which is up here, because it has its own little section for it. You go trade flow, and you can see all of them here. You can just have this open throughout the day, which I do. This is how I get alerted of them. Actually, I don't, just to make sure that I'm on top of them, I get alerted from them from here. I'm also getting alerted in our Discord as well through TradeFlow. So something you can do is sit here and watch these, or you can just set an alert on level 25 swings, because this is where I'll find them. I usually capture all of them. I miss a few. Because it's manual. There is no way for me to just webhook these back into the level 25 swings as of right now. That might come in the future, but as right now, it's completely manual. So I'm sitting there staring at it, looking for these plays for you guys, and trying to set these up so you guys can win. So I want to take an example here of one of them. Let's just look at a recent one. Let's see. These are two recent. Let's look at NVIDIA. Okay, so NVIDIA triggered at 9:42 a.m. and the strike was 250, expiration 10:29. So these people are thinking, and there's over $1 million in premium. So these people are thinking that you are going to their strikes are going to be near the money or in the money by 10:29, and the strike being, or the price needing to be 250. So let's take a look and see what happened. So if you go to the chart, he's got alerted here at 9:42 a.m. So let's actually get back into let's get into the 30-minute chart. Where are we at? 27. So let's take a look here. 27. All right, so these gonna get alerted right around here. So you're looking at 247. Actually, this might be able to show because they're expired. They're not going to be on here. Yeah, they're not going to be on there. So the stock difference was $2.53. That's what I was trying to get at. Was the stock difference is $2.53 between the strike and the entry point. So they probably got in around here. Like this level right here, because it hit it twice. So they got in right around here, looking for it to go to 250. Now, here's what's going to happen with a lot of these contracts. They're not just going to shoot up. It's not like, oh, this is automatic. It's going to go right up right when I buy it. That's not the case. The case is very often that it's near a resistance level. Let's look left, 249.50, that area. That's kind of where they bought, 248. 248.75, that area, right? Then it gets a pullback back down to the support line. Now, does it always retest the support line? No. Is it safer to wait for some kind of retest? Probably, but you might miss more trades. So if you're a FOMO trader, maybe just hop right in and endure this pullback. And then you're looking at the next day, kind of almost an inside, it looks like an inside day, so it just didn't move anywhere. We actually alerted NVIDIA from here, not based on the contract, but based on the inside day, and the confluence was the contract, the bullishness of the contracts. So you actually alerted here as well. But let's say you got in here. So you're enduring some of this, and this is going to burn. These are weeklies, so it's going to burn. You can average down right here, right in this mark. At the end of the day, we're securing a better price, and then we get a pop open at 248. That kind of same looking level right there. So pull back down, and all of a sudden it breaks up and goes into the money. I mean, it goes into the money the morning of the 29th, the expiration, which is great. But here's what I want to do and show you is taking a weekly off of these plays can be risky. That's why I call it a lotto. Yes, it did end up in the money by $5-6. Actually, it closed. Let's see, it closed $5 over the money. So that's great. You could have sold over here. You could have sold anywhere in this day and been profitable with it. But decay would have hit. So you're not going to get, your max win is if you took a contract that's further out. If you took a 255 contract that expires in January, you'd be already in the money. So that's a safer way to play these. For one, if you don't want to take the weeklies, but I did say, you can play it like a lotto and take the weeklies. There's no problem doing that as long as you're okay with that risk. Now, I want to show you another one that I know did not go the way that people thought it would go. I had crypto stock, please. That being the Facebook one from a while back. So let's take a look at the Facebook one, okay? See, look right here. I alert. This is how it will kind of look. 12 orders. Actually, wow, that's kind of funny. I alerted NVIDIA 2 days before that. This one came in on 12 orders, so you could have gotten it way cheaper price. Anyways, so the Facebook one, almost 30 orders of the 1029's 340 strike. 1029, and that came in. What day did that come in? That came in on 10:30 on the 25th. 10:30 on the 25th. So right here, 10:30 hits right there. So you're buying here, right? The 340 contracts. So you need it to come up to here. Let's just draw this out. This little, not gonna do it perfectly, just right there, that area. So you're buying here. Does it go up? Yeah, it goes way up. I mean, it goes up $7. Let's see. I'm sorry. It goes up almost $6 from the entry, which is great. But here's the psychology behind these plays that can get people in trouble is they think, okay, well, but it's going to go to this. It's going to go to the strike. It's going to be at the money. That's the thought, at least, right? But here, if you zoom out, and this is why I'm going to show charts. The days before, you have a massive gap down. You have a $20 gap down on Facebook, or a $15 gap down on Facebook, in a downtrend. So taking calls, number one, is risky, just based off the chart. Okay. Number two, your strike price is $20 basically outside of the money from where you're looking. So my thought is when that happens, when there's that much of a difference, I mean, let's look at the actual, it tells you the exact difference. $16.12, a 5% move in 2 days, or I'm sorry, in 4 days on Facebook. Is it possible? Absolutely. But what that tells me is these people are buying to scalp, intraday or maybe a day swing. And here's what you have. Entry, and he goes up. So they probably sold up here, saying, okay, I'm going to scale out, which is super smart because why? Look left. Oh, perfect little resistance. Interesting. So they sell here. What happens the next day? All the way down to 308.85, 308.50. And if you held that thinking, oh, it's going to go in the money just because it's the level 25 play. Yeah, it's going to go in the money. That's not right. That's not right at all. It doesn't go in the money every time. So you have to be able to chart when you play these plays. I will provide a chart for you and give you a stop loss and maybe even a take profit idea. But again, this is not financial advice. So you guys have to do your due diligence with these and attempt to at least understand the drawbacks of just following flow. So look at confluences. That's why I'm adding the algo flow, or at least I'm going to try to, which again is going to kind of slow up the alerts a little bit. So if you notice them, here's what you can do. So let's say you're like, oh, I've noticed that Facebook play. You can go to TR channel, type in TR algo flow, Facebook. And out will pop your what the algo is telling you, what the option contract data is telling you. Oh, it's bearish. These guys are taking calls. They know something I don't. Well, okay, I'll limit my risk. I'll take 2 contracts and I'll just be out by the end of the day. Boom, there you go. That's a perfect plan. Instead of thinking that everything is going to go in the money, don't do that. So that's how I would trade these. I would look and do a little bit, take your time with it. Just because there's an alert doesn't mean you have to buy right away. There's always pullbacks, there's always moves. I mean, even with the Facebook one, yeah, it went up quickly, but if you got in here, you still have a chance to get in down here at 322, right? So guys, what I would say is do some diligence with these. I will try to provide as much data as possible with the charts and the algo flow, take profit, stop loss zones, kind of like I do with the composite channel for Tesla. But you guys really need to be able to utilize the data that's available to you, which is the TR channel. I mean, you have endless data here. Oh, I got the algo flow for Facebook, but I want to see where it is on the, oh, it's below the 200 MA. So if you have a rule in place with your trading, I can't go long below the 200 MA, then you're not going to take these contracts. So don't just play the level 25 swings just to play them. Integrate them with the data you have available to you. Integrate them with trade strategies that you use, and integrate them into a well-versed risk-reward plan too. So guys, that's pretty much it. I don't really have much else to say on these. They are powerful, but they're powerful when you trade them correctly, and when you trade them with proper risk-reward and management. So guys, I encourage you guys to do that. I will see you guys in the next one.